Hello and welcome. My name is Aurelie L'Hostis. I'm a principal analyst on the financial services team at Forrester, and I'm very happy to be here today participating in this webinar, which is hosted by Velia Solutions, to talk about the future of banking. So I'm going to present our research, the research we're doing at Forrester, and what we think are the key trends that are going to define the future of banking. So there's a very challenging economic climate at the moment, so that's been going on for a while. There's an ever increasingly competitive landscape that banks have to deal with, and banks are going to have to, deal with all that pressure, and they need to acquire new customers, they need to improve that customer experience, and obviously they need to build trust with their customers. So that means that in order to be able to thrive in that environment, they need to be a lot more resilient, they need to be more sustainable, and they need to deliver new business models that are going to enable them to drive long-time growth and profitability. Now, we think that banks are going to have to re-articulate their value proposition in that context. They need to, at the same time, to simplify their customer experience, to improve it at the same time. They need to deliver new value with their data, and they need to demonstrate purpose and leadership. So in our research, we have examined a number of changes that we expect are going to define the future of banking over the next decade. So let's deep dive. So as I said, banks face a number of challenges, and we believe at Forrester that when we will look back at the pandemic years, we will see that as a great reset of the early 20s. Banks had to adapt to the new situation, and they had to keep at pace with the acceleration in terms of what they had to do with digital to meet the needs and demands of their customers. And that meant that they had to capitalize on that pace of change and accelerate what they were doing to be able to, face the current situation, but also prepare for the future. And we broadly see four sets of drivers. There's one set of driver which is around customers and trust. So customers and the way they use channels to manage their finances, this is changing over time, but we see that it keeps evolving. So customers want better digital offerings, they want better digital experiences to manage their finances. But trust is a key differentiator, and this is definitely something we're seeing in our research. So trust is, we see a new pattern of trust emerging. So what matters is what is it that customers trust and why they trust certain organizations more than others. What we're seeing is growing trust in startups, for instance, like tech startups, fintechs, but also trust in bigger global platforms. Think of Google, think of Apple that is making big strides in financial services. Now, your competitors are also changing. So what we're saying is that the financial services stage is now global. Your competitors are global. If you think of company like Google, like Apple, like WeChat, if you're looking at China, these companies have a reach, sometimes a global reach. They have a tech stack that enables them to scale really rapidly. And we see also distribution and channels and models that are evolving rapidly to meet the needs of customers. That means that you also see lifestyle platforms, and here I'm looking specifically at what we're seeing in China with WeChat, with Alipay. It's very interesting to see how they are actually building financial ecosystems around their own offering. So this is also something that is important to look into. Meanwhile, economics are under a lot of pressure. I'm not teaching anything, like banks have to deal with high operation costs when it comes to headcounts, when it comes to legacy tech, so the tech spend, there's a very hefty bill to pay here, compliance, and because of a number of economic forces that come together, this is also impacting banks that have to look at that margins kind of shrinking, and they need to understand how they can lower costs in that environment. We need to bear in mind that high inflation is subsisting, and there's still a cost of living crisis. So this is also adding a number of challenges for banks. But the regulators are also shaping what customers expect these days. I mean, when you're looking at what's happening with new open banking initiatives, that means that this is also shifting customer experiences, what they expect in terms of data ownership, in terms of consent. And we see open banking at the moment also moving towards open data and open finance. So this is also going to drive lots of changes in their environments. And parallel to that, there's also sustainability. There's a huge focus on the ESG factors and how this is also going to change the industry. Customers, employees want to work with or actually partner with organizations that have that sustainability focus. Now we know that some of the changes we're seeing, that sometimes the things that we already saw before the pandemic. So I think the drivers of the future is definitely an evolution of drivers of the past. Some of these things are currently happening. Some of these changes, I think, we will see more prominent in 2025. But we think that some of these trends will be table stakes by 2030. So here, I think what I want to talk about is what we're seeing at the big themes, what we see emerging in our research when we look at the future of banking. And we think that 4 themes are going to define the future of banking: invisibility, connectedness, insights, and purpose. And these 4 distinct areas are areas where banks are going to have to transform if they want to meet the future needs of customers and the future needs of the markets. And we see the rapidly changing financial landscape that they have to deal with. So invisibility, because leading organizations will use technology and far deeper insights to understand their customers, to understand where they need to insert financial experiences and products at the customer moments of need. And distribution models are changing, which means that for banks, they will need to do that, sometimes at the expense of their brand visibility. So that's another challenge for them. Connectedness. So obviously, to remain relevant, banks are going to have to be present in the ecosystems and in the products that their customers are using. And technologies and partnerships and ecosystems need to actually be integrated in order to offer these experiences. And this is going to happen across multiple industries, where we will see partners sharing data and resources in order to deliver financial outcomes for customers. Insights. We know that for many years, and banks don't have problems having data, but I think they've been quite complacent with the data they have. So what is going to happen is that in the coming decades, banks finally will unleash insights. They will extract the real value from this data to provide more personalized experiences to their customers, but also to innovate with that data. And this is, I think, a very good opportunity for banks also to leverage that in order to become some kind of custodian for their customers' personal data and identity. And I will talk about that in a minute. And then finally, there is a focus on purpose. And I think this is something, that probably was also driven by what happened with the pandemic. But we know that consumers prefer to work with organizations that align with their environmental and social values. So they will tend to actually look for companies that have corporate values that they believe in and that actually activate those values. So taking a deep dive into the themes, we see the delivery of financial services becoming increasingly invisible, embedded, and autonomous. So traditional distribution models are definitely evolving, making use of marketplaces to provide financial services in the customer's moments of needs. And organizations and leaders are using new technologies in order to be able to do that. So we're looking at open APIs, 5G, everything that can actually help connect finance to devices. And it could be a connected home, it could be a smart car, and so on. But as a result, what we're seeing is that transactions and payments will be embedded within those customer journeys. And there's going to be a higher level of automation. So banking services become kind of seamlessly integrated into customers' journey. And that's why banks might actually lose some kind of visibility by doing that. Autonomous finance has definitely a shift towards autonomous finance, which means that there will be an orchestration of financial outcomes using algorithm, and many consumer interactions are going to be disintermediated because of that. And you might already think, what's going to happen is that some of these interactions will be integrated within intelligent agents. You can think of Siri or Alexa and so on. Now, the bank in the future will own the service, will own the product, but not necessarily the channel. And what I mean by that is that banks are going to have to assume less direct contact with their customer. So it could be that if they want to serve customers in their moments of needs, they need to be present in the ecosystems where the customers are, the products that they're using. So think of, if you want to set up an email provider in a new phone, think a little bit about the same that you might want tomorrow to embed your bank within a smart device, and then you have the banking which is nicely embedded in all your experiences. Now, the power comes from the combination of all these technologies themselves, like how you're going to deliver that level of interoperability so that you can deliver on financial outcomes. And this needs to happen with partners within those ecosystems. So as a result, banks will have to build modular, composable products and services in order to actually insert those financial services and experiences in the ecosystems, offers platforms, and so on. And it could even be that you want actually to offer that and plug that into a machine or thinks of a predictive analytics engine, for instance. So that, I think it's something that is going to be important because you need to have that level of agility and that level of integration and flexibility to enable the future of banking. And banks, therefore, will have to design for integration, will have to design for collaboration, and that means that they will have multiple routes to market in the future, and they need to think about where they want to be in the next 10 years. So obviously, they will still be able to sell directly to customers, but it could be that they want to offer their product as a service. It could be that they want to develop their own marketplace, or they want to actually participate in a third-party marketplace, or own their own platform, and if not, how they're going to play in others' platforms. So that's for invisibility. Then there is connectedness, and we know that the future, if not the present, is already highly connected. And to be relevant to customers, banks will now have to be present in their customers' ecosystems, what they use, where they take action. And to do this, they need to cease thinking of partnerships as a threat, which is often, I think, the first perception when we talk about collaboration, is that might be seen as a threat. And I think instead we need to think about platform business models. If you think of Alibaba, if you think of Amazon, if you think of all these platform business models, they actually drive growth and they end up improving the customer experience. So we think that financial services firms need to, in a way, pivot from thinking about, wanting to have the customer come to them and instead bring their products and their services to the customer where they are. And that's why we're talking about collaboration and connectedness. And look, for example, what's happening in China when you have financial brands actually working with the big dominant big tech. Think of the WeBank and WeChat. Think of Alipay. They are actually embedded within these connected ecosystems, and there's a payback for them because they actually are present within those ecosystems. And we start seeing banks like, for example, DBS or Standard Chartered. They are now also working with partners, building marketplaces, and it could be for traveling, it could be if you want to buy a car, if you want to buy a property, but they realize that there's a lot more customer engagement that can happen once you actually partner with other companies by creating those marketplaces. We know that products using 5G connectivity will actually support edge use cases, edge finance use cases, because you can connect finance to a number of smart devices, and that's a way to obviously expand what you're offering. And what we think is that in the future, banks will actually focus less on monetizing the product, but actually monetize interactions, because we understand that there's a lot more value in providing this ongoing customer engagement than just actually selling the product. So banks will actually reconfigure their P&L around the customer and the customer needs and not products. And that is important because when we see those ecosystems shaping up, you understand that you want to understand how you can leverage those partnerships, understand that, for example, you can capture revenue from event servicing, or take the case of Starling Bank in the UK. So they have a marketplace, but then they have partner revenue sharing. They monetize the API. So there's also revenue that can come from that business model. I think that here is also, maybe a good time to mention again, going back to digital banking architecture. But that's the reason why you need to have that level of integration and an architecture that is flexible enough to actually manage that. Because only with that you're able to enable this kind of like shared value. You enable to have this partnership and the monetization that happens thanks to that. Now, we think just to finish on that, we think that banks will deliver value in constellations of platforms, and connecting with other platforms, with other ecosystems and marketplace. And that's why we talk about constellation of value. It's like when you have big constant partnerships and integration within and between different ecosystems. Now, insights, and we think that the next decade is all about insights and who you trust in that environment. So financial services firms will start to, as I said, actually deliver value with the data they have and use that to drive more personalization, more customer engagement, and elevate as a result their custodianship of consumer data. So I think what is going to be important is that the quality of that data obviously is a differentiator, because on the one hand you can drive personalization, on the other hand this is what is going to enable the shift to autonomous finance. It's interesting to see what's happening again in China. If you're looking at the Chinese platform like a Pinghan Insurance, you can have also the example of Ant Financial. It's very interesting to see that what they're doing with insights-driven opportunities around data and digital identity and collaboration, building this big financial ecosystems around, again, the needs of the customer. But that starts from the data and from digital identity. So we think that in the future, financial services organizations, including bank, will build what we call a consumer insights continuum. The idea is how you merge and you connect your data from your partner's data, and you actually use that to create event-driven engines, and you deliver capabilities that can enable you to provide continuous real-time personalization that enable you to have, for example, underwriting as a service that improves, kind of precise risk management. And that will come from, again, this level of integration, data flowing between different platforms and systems. Optimizing engagements. It's interesting to see how we start seeing a number of organizations see how they can optimize even the user experience, for example, in a mobile banking app, depending on how customers are using the app, the usage patterns, what they prefer, and so on, having a constant optimization of the engagement within this application. And going forward, obviously, a lot of AI is going to optimize that. There's a lot of acceleration in that space. But obviously, as soon as you say AI, you have to think also about that question of trust. With the shift to autonomous finance, you have to understand it's a big leap for customers to give the permission to banks to use their data to automate a number of things. So we need to make sure that this AI that is going to drive all that is responsible, is ethical, is explainable, because what you want to avoid is accusations of unconscious bias. Customers expect what we call return on consent. So I give you consent and permission to use my data in order to increase personalization. But trust and permission must not be taken for granted. So obviously customers want something in exchange of that data, of giving banks this permission to use that data. So that's really important. And I think customers now are demanding a lot more transparency in terms of how, which data the banks is going to use, how they're going to use it, who they're going to share it with. So privacy really needs to be embedded in what you're building for the customer. And collaboration will be enhanced with open approaches to ecosystem engineering. So it's very interesting to see what's happening in the developer space, because developers work with other developers trying to design new products, innovate around products and services. And that can actually lead to creating better products and offerings for everyone. So, I think that's where Take for Good, gets his name from. So I think that when you talk about the collaborator, we're thinking about developers working together to drive the future of banking. And finally, we're moving towards a more, I think, purposeful age, and that's a good thing. I think COVID-19 probably amplified, I think, these trends, but this is something that was there, I believe, before COVID happened. I think that we're definitely seeing that customers want to work with banks that align with their environmental, social values. They want organizations that are much more focused on their community's well-being and so on. And banks will have to obviously develop programs that go in that direction to activate their corporate values. So what we're seeing is that, first of all, there's a shift to sustainable finance, green finance, in order to meet the needs of customers, also meet the needs of employees that want to work with banks that are providing this kind of offering, but also banks increasingly developing financial well-being programs, financial inclusion initiatives, and so on. So innovation will be harnessed for sustainable growth. And here I think we need to emphasize the growth element, because I think that, and this is something we're seeing in research, companies that drive sustainability are more likely to be resilient, to grow in the future. And open cultures, obviously, that build and curate communities are the companies that will be the leaders of tomorrow. And with that, I'd like to thank you for listening, and I'm really looking forward to our discussion with the panel later on with Aurelie Solutions and BNP Paribas. Thank you very much.